Snapchat stock plummeted down over 35%, dropping from the $18 range all the way down to the $11 range. Does this make Snap a buying opportunity, or is it going down further from here? The drop was due to their Q4 earnings report, which obviously wasn't great judging by the reaction in stock price. They reported that in the last 3 months of 2023, they added 8 million daily active users, 2 million more than what was estimated. This sounds good. However, in 2022, during the same time period, they added 12 million daily active users. So they beat their estimate, but they are still way below what they were last year, which shows lack of interest in the Snapchat app year over year for Q4. That being said, the company ended 2023 with 414 million active daily users, which is 10% more than 2022. So why does Snapchat's price fall so hard? Well, the reported revenue was $1.36 billion for Q4 2023, which is below the $1.38 billion estimate by analysts. So they did have user growth, but their revenue is not where analysts want it to be. This is in part due to slower growth in brand advertising revenue compared to the competitors like Meta and Amazon, who have been reporting strong ad improvement and impression growth. Snapchat also has a high SBC, stock-based compensation, which is a form of employee compensation where employees receive shares or stock options in the company instead of, or in addition to, cash. This can impact profitability and deter investors. Snap issues new shares for SBC. It increases the total number of shares outstanding, which dilutes the ownership percentage of existing shareholders. SBC is also considered an expense in accounting standards, meaning it reduces the reported profits. Investors use profitability, earnings per share, to assess a company's health, so high SBC can lead to lower valuations. Snapchat also announced layoffs of 10% of its workforce just before the earnings report, which raised concerns about the company's financial health and future. Snap is looking like it might have the third worst day since it debuted on the market in 2017. Its two biggest one-day drops were 43% in May of 2022 and 39% 2 months after. So with today's 30% plus drop, does this make it a buy the dip opportunity? Well, according to Barclays analysts, the answer is yes. Well, more like maybe. As they said, buying the dip seems worrying, but is likely the right thing to do here. Also giving Snapchat a $15 price target. They also said Snap feels like Meta around 5 quarters ago, at the cusp of some pretty nice recovery trends, but with a few believers in the thesis. I asked our exclusive in-house analyst what they thought about Snap. Our options specialist Swinging Bull said that he thinks that there could be more downside to the $10 area. Levels to the upside for him would be $12.50, $13, $14, and $15. Easy levels to remember. Our crypto and technical analysis specialist Jay says that Snap is good for buying for him personally, lower down at the 733 or 482 level, depending on how hard it drops here, if it does. He's looking for a drop below one of those levels, followed by a 4-hour candle close above it, or a possible entry. We have an 8-week charting master course available to our premium members, which goes over exactly how Jay finds his trades using technical analysis. StocksBuddy shows Snapchat as bearish. This is our custom indicator that shows bull and bear signals, as well as a moving stop loss area based off of support and resistance. I'll leave a link in the description of this video to our special discount for StocksBuddy, and yes, it works for Forex and crypto too. I hope to see you next video. Make sure to follow our blog, blog.pbalerts.com, and follow @MetaMattTrades on X for more trade ideas and breakdowns like this one. I hope to see you there, but until then, I hope that you all make some bread.